Hey, good morning, everybody. Sorry I missed you guys yesterday. I was really under the weather yesterday. So we kind of took the morning off. Um, let's kind of get right into it because it's some important stuff is kind of happening right now, and it's important to understand what's going on. I always teach our members, if you're going to sit there during the stock market day and watch the market and things like that, don't just stare at your portfolio. Watch the market, watch sectors, watch the news, watch different newses. Don't just get fixated on one channel like a CNBC or a Fox Business News. Spread it around, just like you should do with your mainstream news. Headline surf. Don't get into the articles. 99.9999999% of all news articles are not news, they are opinion. You just want to know what's happening and you'll decide why it's happening, right? You don't need some liberal arts degree telling you how economies work. Which is basically what you get. So look, guys, like I said, I always teach our members to not just stare at your stocks, right? It's easy to do this way, right? Maybe you got a few red plays, you just kind of mope there and sit there, but you want to know why. You want to understand the market. Your comprehension of the market and why it's doing and why it does things is what's really going to make you money, right? And there's something important going on right now. There's this shift, and what you see is right now there's a shift going on, and it looks like what that shift is from those high valuation tech stocks. Things are rolling into a little bit of industrial value, and at some point it's going to wind into that tech money is going to want to stay in tech, but it's going to want to get some of that value play love, and so your fangs are going to start really picking up. That's why we recommended that you take a look at Apple a couple of days ago. That's important. So let's take a look at the market, and I'll explain this a little bit more. If we pop on over to CNBC, let me share my screen with you here, gang. And we pop on over to CNBC. You see futures this morning, right? NASDAQ down about 1.25%, but that Dow's up another 0.25%. And that S&P is pretty much flat. But overnight, you had your rates, right? That 10-year rate went to 1.6% again. 2%, 2.25% is the level the Fed's watching. But as market traders, remember, you always want to be trading forward, guys. You don't want to be trading today. You want to trade what's going to happen today. You buy the stock today so you can sell it down in the future, right? So you want to know, and this is important. See, the last time we had this happen, right, couple weeks back, it just rocked the market. But you can see the market's kind of taking a little bit better. What's taking it hard? The NASDAQ. And the reason is, and I got nothing against the young lady, but like this Kathy Wood, you saw her yesterday, right? The last couple of days, every time the market is red or green, she's screaming about Tesla and all these high valuation stocks and stuff. Now, high rates, the first thing high rates will go after are high valuations. And you're seeing that in the market. Let's go look at some charts, guys. So this is the COMPEX. Let's start here at the top. Let's start with the Dow Jones, okay? You see what's happening in the Dow here. This one, right, definitely over the last couple sessions broke out to a new bull leg. And you can see it, right? It broke out, it confirmed it, and it's up again today, this morning. Now, let's fast forward over to the S&P 500. Remember your Dow. Why did your Dow do well? Well, you saw it the last few days, right? Caterpillar, John Deere. Yesterday it was Boeing. Who knows what it is this morning? We'll double check. But it's a flight into value. And everybody likes to talk about what money's doing. But institutional money, that is the habit and that is the direction it's always done. Is when things get overvalued, things are looking dicey down the road for valuations, they'll move their money into value. John Deere, right? Consistency over time, great dividends, what we always teach you. Well, what's going to happen here, guys, is you see the S&P. The Dow is industrial heavy, right? Of course, it has some of those tech stocks in it, like your Apple and your Microsoft, but it's got your big industrials in there, right? That's why a lot of people, that's why it's called the Dow Jones Industrials. but it's got transports in there. It's got a lot of stuff in there that the NASDAQ doesn't, right? Now, the S&P is kind of a combination, right? The S&P is supposed to be the 500 companies that most represent the economy. There's a lot of tech in there, but it's a different kind of tech. It's not that high flyer. You don't see Palanters and things like that in there, quantums and whatever, art trading and things like that. What you see in there are your tech stocks that are really value stocks too, right? Your Microsoft, your Apples, things like that. What's going to happen here is you see this NASDAQ, that S&P is kind of still resolving. It pushed to a high yesterday, but it didn't close, right? It didn't close at a high. So it's kind of still in this mush right now. And we'll see how this morning goes. Let's go look at futures again. And you see the S&P is pretty much flat. 0.24% is flat. But let's pop back to that chart. Now you look at the NASDAQ, right? If you just think about it over the last couple of days, you would think the NASDAQ was at all-time highs, right? Everybody's pounding on the table. It's up 400 points, blah, blah, blah. But look at a chart. Chart never lies. All you are is down here in this mush. You're still way off that high, all-time high. And what's happening here is at some point, the NASDAQ, and these rate hikes, these rate moves might trigger it with this move on the 10-year and stuff. But what will happen is people want to stay in tech, and they don't want the John Deeres. They don't want the Caterpillars. They want to be in tech, but they want value too. So the money will move in the NASDAQ into your value tech stocks like your Microsofts, your Apples, maybe even Tesla too. It's a profitable company, but you know what I'm saying, guys. And that'll push the S&P to an all-time high and should take the NASDAQ with it, right? Or the NASDAQ will go down and the other two will go green, depending on how bad the beat up is on those overvalued stocks. So guys, you want to be aware of this shift in money, right? It's already shifting into your industrials, right? Your value for protection. Now you're seeing your high valuation stocks kind of unwind, and your Apples and stuff are showing a little bit of life, right? Yesterday, Apple took back 120, which was important. And it closed at that 121. 120 is an important level if you look at Apple, because that's right around that split, right? The last time it had a split, it's digested that split very well. You see it made a little bull leg here to the high, but then it had a little consolidation. What happened here? Well, a combination of things, right? There was a money move into your industrial values, right? Your Cokes, your teas, things like that. I don't know if tea, some people might consider it a tech stock, but really it's a grandpa stock. And then you saw that little sell down, but it caught real well. And now you're seeing money come back into it. So be aware of these kind of things, guys. It might be time. That's why we focused on Apple for the stock of the week this week. And we felt like, if you want to get some tech in your portfolio, do it smart, right? Get a little of that good dividend love and that price growth. And probably the most amazing balance sheet on the planet is Apple, right? I mean, my God, they made $1 billion in profit in a quarter, not in revenue, in a quarter. Jesus Christ. But anyways, guys, be aware of that market move, okay? So today's Friday, so I recommend that, maybe take a look at your portfolio, take it easy. It'll probably be a low volume day, but watch how these markets react once the trading starts, because there might be some very definitive signs here. The stimulus deal, right? The stimulus deal is done. So they're talking about maybe checks will go out over the weekend. That'd be fantastic, right? Because guess what? Everybody's going to spend those checks on something good. Because it's like free money at this point with people going back to work. But anyways, look, so what happens is you've got some big retail earnings next week. On the 18th, you have Nike, you have Ollie Bargains, which is one of our favorites, Ollie Bargains, OLLI, if you guys are looking for a nice little discount retailer. But you see, this money will start flowing into that. So maybe you get some positive outlooks, right? The problem with the last few days is a lot of these earnings reports, the forward guidance has been soft. And people don't want to hear that right now, right? We're supposedly opening an economy. We just popped in a $1.9 trillion debt stimulus, and all this stuff. They don't want to hear, oh, the outlook doesn't look that good. They want to hear the outlook looks fantastic, right? Because we're opening up and everything should be growing like a banshee. So look, guys, it's a good day for Friday to kind of step back, look at your portfolio, make sure you got a little value protection in there. If you got some options, play light and play very selective like we are. I think we got 4 plays on the table right now. And they're all out to April. You know, we're going to let this kind of mush work out, and we suggest you do too. But other than that, guys, watch this rotation. Okay. Nobody's talking about it. And it's really happening. So you can kind of be ahead of the curve on this one. Just watch how that rotation goes. You see, as rates go up, high rates go after high valuations. The high valuation trade, like I showed you on the NASDAQ, started unwinding, and it's still unwinding, right? But it still has last gas. But there's also that movement that'll come from on the tech high valuations into tech value, which is your FANG stocks and stuff like that. Okay. Something interesting this morning happened, just to close this out. Netflix, guys, this is what I'm talking about. Read between the lines a little bit. Netflix is looking at cracking down on password sharing. If you guys know, anybody that's used Netflix knows, if you have a password, maybe 40 other people have it. And Netflix up until now has always encouraged you to do that. Why? Well, back in the day, guess what? When they had House of Cards and stuff, you guys remember House of Cards, how everybody had to watch it? They wanted you to share your password so somebody would watch House of Cards. You don't pay for your thing. Guess what? They subscribe, right? It was a great way to bait people using their good content into subscribing. Well, now they're not willing to do that. Why is that? Well, look at the landscape in streaming. They never had this kind of competition. There was no Disney Plus. There was no Paramount Plus. There was no HBO Max, all this stuff, right? So now they're tightening the reins. If you're a Netflix shareholder, you might want to look forward on this and see there might be some headwinds coming, because now we're circling the wagons and we're getting defensive on our subscriptions, right? So, right, we don't want them. If you're a Netflix shareholder, the last thing you want is people buying their Disney Plus subscriptions and one person sharing 50 Netflix viewers. Anyways, guys, that's the kind of stuff. Look into the market. Look into these things. It's easy to look at a headline like that. Next, Netflix is testing a crackdown on password sharing. But ask yourself, what does it mean, and what does it mean going forward? Because if you're a Netflix shareholder, you want to know, right? All right, gang. You guys have a great Aloha Friday, okay? It looks like it's stopping raining in Honolulu. We had some pretty good floods. I had a little cold yesterday. I'm sorry, everybody, that I missed you yesterday, but we'll be back Monday morning, all right? You guys have a fantastic weekend. You guys check out the stock of the weeks, all right? And if you get a chance to, subscribe to either the YouTube or the Investing Lab, whichever one. All right. Okay, guys, have a great weekend. It was a lot of fun this week. Let's go get trading. We're about 30 minutes from the market open.